Since the Fed said no recession way back in late July, the S&P 500 has hit a 3-month low. And things are starting to head downward the last couple months in the stock market. Will crypto follow? What will happen to Bitcoin? This will be the first ever recession, true recession, where Bitcoin has been in the midst of it. And what will happen to the rest of crypto? That's what we're going to try to unpack in this video. Welcome back to the channel, everybody. If it's your first time dropping in, make sure you guys click that subscribe button down below so you don't miss out on any other information like this. We're here every single day talking about the macroeconomic environment, talking about Bitcoin, Ethereum, talking about all things crypto all the time right here on the channel. So make sure you guys are locked in. Also, smash that like button as well. But that chart right there speaks volumes, guys. The S&P 500 has been tumbling, and recently we hit our 3-month low. So what are the experts saying? What's going to happen here? Have we been in kind of a soft recession and we've got more pain to come before more gains? Could be, right? And it's hard to tell. Nobody has a crystal ball. This is why I think it's very important that you kind of zoom out, see big picture, and have different scenarios played out in your head. I think one thing that a lot of people will tell you in this type of environment, cash is king, right? Holding on to cash is not a terrible thing to do right now, because if we do go ahead and dip lower, obviously we want to have cash on the sidelines to buy in at premium prices. Now, others may say just dollar cost average. Don't even worry about it. And that's a strategy that could work as well. And I think I like to deploy kind of a combination of both, right? So I'm dollar cost averaging into Bitcoin and Ethereum every single day, very, very little amounts. But on days that turn red, and if there are red days ahead in our future, I will be buying more. That's the cool thing about dollar cost averaging. You can always just add more as you see fit and stick to your DCA strategy with still buying the dip with some cash on the sidelines. But you've got to be very, very careful that you don't go all in and then all of a sudden the market goes all bad. Now, with that being said, I want to take you inside this article as well. Stocks, banks, and real estate headed for trouble, and a recession is still looming. This is coming from Yahoo Finance, and we're starting to see a lot of these articles written out there. Yes, it does induce fear. Yes, it does induce uncertainty. It causes the markets to be unwavering, a little bit, and it's not fun, right? Again, nobody has a crystal ball, but this Wall Street legend, Byron Wyan, warns that we could be looming, a recession could be looming. He says, everything that I'm looking at makes me think that there's trouble ahead, Byron said. The vice chairman of Blackstone's private wealth solutions arm said during a recent Rosenberg Research webcast. And if I'm right about that, then the market is dangerous right now. He spent 21 years as Morgan Stanley's top U.S. investment strategist, is known for his annual list of, quote, surprises for the year ahead, basically good stock picks for the year ahead. He reeled off a laundry list of concerns to veteran economist David Rosenberg during their conversation. They included the fact that stocks have outperformed bonds during a period when interest rates have risen sharply, and a handful of stocks, including Tesla and Nvidia, are responsible for most of the market's gain this year. As you guys know, tech stocks in recent years have really propped up the entire market. Apple, Amazon, Tesla, Netflix, Nvidia, just to name a few. But he also flagged slowing employment growth, the prospect of less demand for U.S. exports as the European and Chinese economies have weakened, and the likelihood that the U.S. government will have to raise taxes and siphon liquidity out of the stock market and economy to cover the interest costs of its ballooning debt. On the stocks front, he predicted a double whammy of shrinking valuation multiples and disappointing earnings next year that will hit the market. He suggested the S&P could tumble by 10 or 20% from its current level today. Now listen, the point of this video is not to create a bunch of panic. It's not for you to freak out. It's not for all of us to go in a room somewhere and hide in a corner. The point of this video is to talk about what this means for crypto, which we're getting there, but it's to also show you what the opportunities are. Because we could choose to look at this a couple different ways. You could choose to look at this as, oh my gosh, it's going to get worse. There's nothing I can do. I'm throwing the towel in. Or you can say, how can I take advantage of these times? Because it's these times during recessions where most millionaires are made. I know that sounds crazy, but it's exactly the time to buy. When everybody's running for the hills, this is the time to really focus in. Block out the noise and find the best assets that are on sale. And who knows, Bitcoin could be heading on sale soon as well. If we take a look at the cryptocurrency market right now, it's such a weird day. Bitcoin was actually up to start the day. Look at this. Look at this chart. This is the one-day chart, guys. Bitcoin flying up almost to 27,000 just to give it all back in hours. And I think this is where the market is right now. It's market manipulation at its finest. I mean, that doesn't happen like that without market manipulation, especially when volume is low, volatility is low right now. And when we zoom out to the 1 year, it's still been a pretty good year for Bitcoin. I mean, you guys have to remember, we started at 16,000 to start the year. We're at 26,000 now, but there's just not a lot happening. Are the possibilities there that Bitcoin could come back down and touch 20,000, maybe even 16,000? Sure. The possibilities are there, but many people believe 20,000 would be the last stop. And again, I look at all of this and say this is just one big opportunity. We know how close we are to a Bitcoin ETF. We know how close we are to a Bitcoin halving. We know how close we are to Bitcoin and crypto going mainstream, becoming institutionalized. I know there's pros and cons of that, but the big dogs coming in means dollar signs, means money coming in, and you have the opportunity right now to be there before the suits. I look at this as an opportunity very similar to the dot-com era, right? Anybody who invested in dot-com companies in the early 2000s were called crazy, right? Oh my gosh, there's so much risk there. And while a lot of companies failed, if you had a few winners in your portfolio, they certainly made up for the losses. I think it's very similar in crypto. That's why I make Bitcoin and Ethereum the backbone of my portfolio and then go hunting for gems after that. I don't need every one of those gems to be a winner. I just need a few. And those few will prop up the entire portfolio. And then, of course, Bitcoin and Ethereum, which I think will be for sure here for the long term. It's making up 60% of the overall market right now. That's the backbone of your portfolio. So am I worried about crypto right now? No. Actually, I'm just preparing for the worst, hoping for the best. I think that's all we can do right now. And who knows? Maybe the Fed does get a soft landing. That's still a possibility as well, right? That is a goal right now of the Feds. And this is the Kobayashi letter saying the S&P 500 is now down 340 points or 7.5% since the Fed removed a recession from their forecast. That was back on July 26th. The Fed raised rates and said they were no longer expecting a recession. The Fed market, the exact high in the S&P 500, that marked the exact high in the S&P 500, which just hit its lowest levels since June now. Since then, rate cut expectations were pushed out by a year, and corporate bankruptcies hit their highest levels since the pandemic. Is the market doubting the Fed again? Well, since the Fed changed their forecast to show no recession, many banks have followed. JP Morgan is one of the largest banks to call for a soft landing. This is a positive thing. The next few months will be interesting, though, as this plays out. And make sure you guys are following and subscribe to this channel right here every step of the way. We'll be covering it. Appreciate you guys as always. Thank you. We'll see you.